Could Donald Trump's tariff make or break your investment into Chinese stocks like Alibaba, Nio or BYD? The stakes are higher than ever. Today we're going to deep dive into how his presidency can affect your portfolio. Tariffs and tension, but where's the opportunity for us to make a huge amount of money? Let's find out. This is just one of the videos of the many videos in the series to talk about how the Trump presidency can impact your investment in Chinese stocks. So remember to subscribe so that you're not going to miss out. If this is the first time you're here, my name is Eric. I've been investing since I was 18 years old for more than 20 years. Yeah, no, not a bit young, right? Anyway, I invest in all kinds of vehicles, stocks, bonds, ETFs, mutual funds, options, warrants, you name it. So in this channel, I want to share with you a unique perspective about Chinese stock listed in the US with my local connections and understand of the local media, not just the state media, but actual real information. The possibility of a trade war is real. Trump is talking about a 60% tariff on everything coming from China, and this is not yet including electric vehicles. Even Chinese vehicles made in Mexico could be subject to a 200% tariff, which is crazy. So the market is on the edge. Will the Chinese stocks bounce back, or we're in for a great crash? If Trump were to impose the tariffs he has promised on Chinese companies, what kind of industries would be the biggest hit? We are talking about e-commerce company, for example, Alibaba, because obviously their platform, Alibaba, is to connect the manufacturers in China with the buyers from around the world, especially in the US. Obviously, if you have 60% more or even more tariffs, then those people would not want to buy from Chinese manufacturers. That's pretty obvious. The second industry that would be heavily impacted would be the electric vehicle industry. Imagine BYD would be selling cars at a price 1/3 of General Motors or Ford. Then of course many people would lose their jobs in Detroit, for example. So Trump obviously is going to protect those industries very heavily. For example, we talk about 200% of tariffs on BYD's cars not even produced in China but produced in Mexico, which of course they aim to get around the restriction of Chinese produced vehicles. And Trump said, no, sorry, even though you produce that in Mexico. But if this is a Chinese company going to dump very cheap goods in America, you're still getting that 200% tariff, which is crazy. In short, Trump trying to protect manufacturing jobs in the US, for example, car industries or manufacturing industries. Obviously, that's why manufacturing industries in China, especially car industry in China, would be impacted. At least they cannot go into the US market so easily, at least not a super competitive price. This is a big problem for this kind of companies. However, companies like JD.com, they don't actually focus on US market, rather a local market in China. So that's why the main competitor from Alibaba like JD.com is not going to be impacted as much. The other example that companies that are not heavily impacted, even though in the same industry and still listed in the US, is Nio, N-I-O. So this is an electric car company, but US is actually not their main market. They are focusing on China and Europe. So unless Europe are also being convinced to join the protectionist trade war like the US with China, then Nio would not be heavily impacted. I would imagine at the beginning the stock price in general would go down because this would impact China in general. But I think JD.com and Nio actually in the medium term would actually rebound. Having said that, of course, the Chinese economy itself is not doing very well either because of the debt crisis, because of the real estate crisis, but this is a separate video which I'm going to cover very soon. So that's why remember to subscribe so that you're not going to miss out. This leads me to talk about one particular company which is very interesting, covered by all of the points above, which is both positive and negative. That is Pinduoduo PDD. The mother company of Temu, T-E-M-U. I'm pretty sure you saw Temu super cheap goods flooding the US market. I'm pretty sure Temu will be impacted by the tariffs, which is a negative consequences for them. However, PDD, the mother company, is not just owning Temu itself, which is in the international market. It also owns business in China, which the very cheap goods actually benefits from the economy slowdown, because when people are poor, they need something like similar to Groupon. This is what PDD is doing to get cheaper goods. So actually both positive and negative for PDD. So this is a more complex situation which I'll have a dedicated video to talk about PDD. But in general, I think that the tariffs are going to impact those companies that are heavily invested in the US, dependent on the US in e-commerce and electric vehicles. Of course, tariffs and tension. Where is the big opportunity to make money? Let's find it out. So where are the opportunities to make money out of this situation? There are two angles we need to look at. One is the US market itself, and the other one is actually the domestic market of those companies back in China. Because after all, the major market is still China itself, even though yes, US tariffs will impact their growth plan in the US, but this is not going to kill them except Alibaba. Yeah, Alibaba maybe will have the biggest impact, but for many other companies like JD.com is more with the Chinese market. With BYD, yes, they cannot grow into the US market as much as they have hoped, but they can still, for example, go to Europe, which they're still doing pretty successfully. PDD is the complex situation I mentioned, but I still see opportunities. So basically, I see a small number of companies really would be negatively impacted by both the trade wars, either because in the US or in China itself, and the Chinese local market, I will need to do the analysis one by one separately. But this is not as bad. So remember to follow me on the other videos and leave me in the comments below which particular company you want to talk about. And of course, don't forget about Nio. Nio, the focus is Chinese market, which I still think that there's a lot of EVs need to be sold, even though the growth might not be as high as initially or in the past 10 years, of course, which Nio was not there anyway. But in the past 10 years, there was a huge growth in terms of cars in China. But now EVs is the new norm. Even though the growth of cars in total are not that high, still there would be a market for them. And then Europe is switching towards EVs, electric vehicles. And there are no huge competitors for them in terms of price. I mean, Volkswagen, as you see on the news, is not doing very well in EVs. So BYD still has a huge potential to expand in Europe. So this could be a potential flashpoint. Don't just focus on the US trade war itself or the US market itself. Look at the world wider, the local Chinese market, and the rest of the world like Europe. The US-China trade war is more than just headlines. It's a game changer for all investors. Knowing where to look for information is already half of the battle. Tariffs and tension. Where's the opportunity to make big money? This is what we need to look into. In the next episode, I'm going to talk about how China's fiscal stimulus package could potentially counteract what the US government is planning to do with tariffs. So remember to subscribe and hit the bell button so that you're not going to miss out. Which Chinese company do you think that the share price will jump up a lot in the coming few months, even with the trade war? Leave me in the comments below. See you next time.